Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about unmedicated order blocks, one of the most effective concepts in understanding institutional price movement. These zones hold the potential to identifying high possibility trade setup and can help you pinpoint precise entries and exits in the market. Stay with me until the end of this video as we will not only break down what unmedicated order blocks are, but we'll also show you exactly how to use them in your trading plan or your strategy to gain an edge in the forex market. Now, what are unmedicated order blocks? Unmedicated order blocks are areas on the price chart where significant institutional buying or selling has occurred, but the price has not yet returned to retest these zones. These blocks represent unfulfilled institutional orders that create imbalances in the market, making them key levels where price is likely to react in the future. They are often found at the origin of sharp price movements, such as a strong bullish or bearish trend. The reason these zones are so important is that they highlight areas where large players such as the banks and institutions have left orders unfilled, which can lead to a strong reaction when price visits them in the future. Now let's look at an example. This is an example of an unmedicated order block, and there are a lot of examples on the chart, but let's make do with this. There are key characteristics of unmedicated order blocks. What makes you believe that the order block is worth trading for? First characteristic is there should be a sharp price movement away from the area. As you can see from this order block, there was an aggressive movement in one direction without returning to retest it immediately. As you can see, price moved sharply away from this area. The second characteristic is there will be imbalance in the zone. As you can see, price left an imbalance in this area. The third characteristic is it has the ability for a high reaction potential when price revisits this area. As you can see, it's when price revisited this area, there was a strong potential. Price reacted strongly due to the presence of the leftover orders in this area. And the fourth characteristic is it has to be located at a trend origin. As you can see, it has a characteristic of the bearish trend. Bearish trend. The price shows that price is trending downward, as you can see. Now let's enter how we can trade these unmedicated order blocks. Trading unmedicated order blocks involve identifying these zones on the chart and using them as key levels for potential market entries. The goal is to capitalize on the strong price movement and reaction that may occur when price revisits these areas. Here is how we can approach trading an unmedicated order block. First, we identify the unmedicated order block. So I have identified this is my unmedicated order block, this area here, and we would look for where price would come back to retest this area. Look at, as we can see, the unmedicated order block has the characteristics of there was an aggressive price movement out, and it shows that there was a lot of strong selling pressure in this area. Now we wait for price to return to the area. As price have returned to it in this particular place, when price return to the area, we would monitor the price action as it approaches the area of unmedicated order block, and we will look for signs such as a rejection, wick, or an engulfing candle. As you can see, there was a rejection here, almost like a pin bar, and as you can see, after the rejection it came an engulfing bearish candle. So our signs are there. Then we will use these signs as our confirmation. The confirmation is our pin bar, our rejection candle. We can also use reversal patterns too, such as double tops or double bottom. We can also look for the volume analysis. Now, to take this trade, we would place our stop loss. We would enter the trade, then we place our stop loss above or below the area of the unmedicated order block. Now, in case of a bearish unmedicated order block, we will place our stop loss slightly above it. Then, if it is in a bullish order block, we will place the stop loss below the zone. Let's not forget that we have to manage our risks while taking unmedicated order block trades, because they involve high volatility. So proper risk management is essential. We have to use small position sizes when trading these zones, and always stick to a predefined risk to reward ratio to avoid over leveraging your accounts. I would advise we can only use a small percent of our capital, like 1 or 2% of our capital. Let's not forget that we have a predefined uh, take profit level. You can decide to take 1:3, or you can go for the nearest swing low or swing high as your take profit area. Now, there are some common pitfalls while taking unmedicated order blocks. We can misinterpret, or we might be forcing order blocks. It is one of the most frequent errors in misidentifying order blocks. Not every large candlestick or sharp price movement qualifies as an unmedicated order block. Forcing blocks where there is no clear institutional activity or context may lead to false signal or poor trade setup. Now, the solution to this is uh, only trading in areas of clear price imbalance or strong trend origins, and you look for other confluences with other technical factors, such as maybe your support and your resistance. Now, let's look for an example of a failed order block. As we can see in the chart, we can see that this area was a strong order block, and it has not yet been retested. It has not yet been retested. And if you see the origin of the trend, you can see that it is trending downwards. This is the direction of the market. It is in a bearish trend. Now we are trying to take a bullish unmedicated order block in a downtrend market. We would have to know Jesus to trade that kind of setup, because it's not going to work, because we are trading against the trend of the market. Remember, the trend is your friend. Even looking at the area of the unmitigated order block, you can see we had no entry signals. We did not have proper rejection. We did not have any bullish engulfing candle. So these are signs that you should avoid such areas. We always need to analyze the overall market structure or trend direction when taking the trade. We have to avoid being over reliant on other blocks, because being over reliant on other blocks alone will not help us. We have to combine it with a little bit of our technical analysis, your Fibonacci replacement, candlestick patterns, or your Fibonacci retracement. Um, I would like to look for an example of a bullish a bullish unmedicated order block. As you can see, there is an example of a bullish. Now the example of a bullish unmedicated order block, you can look at this area on the chart. You can see this is a bullish order block. This bullish order block hasn't been retested in present time, and it shows that there was a strong reaction from this area. There was a strong reaction which broke structure, and price is trending currently in the upward direction. As you can see, price is trending in the upward direction. So we'll wait for price to come back to such areas. As you can see, price came back to this area at this place, rejected violently. As you can see, there was a pin bar here with an engulfing candle. This is a very strong signal that it's time for us to take the trade. Then we bring out our long position, we take the trade. Let's not forget our stop loss has to be below our unmedicated order block, slightly below it. Then we would target a fixed risk to reward ratio, or you can go for the swing high or swing low, previous swing high or swing low. You can go for 1:2 or 1:3 as the case may be. Let's not forget we are only risking a small percent of our account, like 1% or 2% of our initial capital. Alright traders, I believe we have come to the end of this video. Engage with us in the comment section. We want to hear about your experiences. If you found this video helpful, do not forget to like, share and subscribe, and turn on the notification bell so that when we drop a new video, you will not miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video. Thank you.